Welcome to this edition of Marvel Spaces. We do host a weekly edition of Spaces where we get to discuss topical issues around the capital markets in East Africa. Today, we are going to focus a little bit on industrial REITs and the benefits they offer to professional investors, how you are protected if you invest in them, and the opportunities they create. We're specifically going to focus on the ALP Industrial REIT, a restricted offer that is in the market currently. And then we're going to deep dive into that and get a bit of an understanding about that. Our intention tonight is to take you from 0 to 7 over 10 in terms of understanding industrial REITs and be able to make you comfortable enough to be able to have that discussion about investing in such a space. I know a lot of us are aware more of stocks and bonds, but also I think REITs is a space that is growing in the Kenyan market and would really love to explore that. So a bit of a reminder that this is a USD denominated income REIT, one of the first products to list at the NSE. I want to start light. I'll allow my guests to introduce themselves. I'll start with Raghav. Raghav, maybe you can introduce yourself and tell us a bit about Africa Logistic Properties. Just a little flavor, and then we'll go deeper into the weeds soon.
Sure. Thank you, Eric, and good evening to everyone. My name is Raghav Gandhi. I serve as the Chief Executive Officer for Africa Logistics Properties. A little bit about myself. I have been a real estate professional now almost for 20 years. I've worked across a number of emerging markets across South Asia, the Middle East, and now I have the pleasure of working in Kenya and working within the Sub-Saharan Africa platform. As far as ALP, Africa Logistics Properties, is concerned, we are an integrated real estate platform that specializes in institutional grade industrial real estate. What that means is that we invest, develop, and manage institutional grade logistics, warehousing, which comprises of industrial parks, distribution centers, modern facilities that make supply chains more efficient, more productive. We can also do real estate such as data centers as well, but typically industrial real estate is much more focused around logistics and distribution.
We need to break down a bit. When you speak of institutional grade and logistics, could you break apart those two separate words and then join them, and then let me know how that relates now to Africa Logistics?
Let me maybe start with the logistics part. For logistics is very important for any company that needs to get goods that it produces or supplies from where they originated to where they are meant to be, typically in the hands of consumers. So as you can imagine, the more efficient that one can manage their logistics, manage their distribution, that's very much a top line impact, right? Because the greater the throughput, the more revenue that you're able to generate. So typically when you look at, let's say, suppliers for the fruit and veg that you see in any supermarket chain, typically that fruit and veg has come through a distribution facility where it came from a farm, let's say. It was brought to the distribution facility where it was sorted, checked out for its quality, typically also packaged, and then it gets distributed to a supermarket or wherever the end consumer purchases their fruit and veg from. So that's the logistics element. And there are some companies that manage their own logistics. There are some companies that hire someone else to manage their logistics. So that's why you have third-party logistics providers. These are companies like, for instance, DHL or freight forwarder services. In terms of the institutional grade, this is very much speaking essentially to the quality of the facility. There can be a range of, let's say, offerings for what can look like a warehouse. Sometimes you get low-grade warehousing, which looks like essentially like a glorified closet space or a glorified shed. We focus very much on the design of the space, the efficiency of layout. We also provide certain features such as fire extinguishers, fire suppression system. You can imagine that in a place where you're storing goods, ensuring that those goods are going to be safe is important. And also I would say is that we focus on, let's say, less of ad hoc developments, so like a single building, and more of creating industrial parks, because that's where we believe that you can get synergies from the different tenants engaging with one another.
I'll come back to you in a bit. Then we'll dig a little bit deeper into why logistics and all that. I want to actually recognize the NSC CEO is in the house. So really appreciative of him taking his time to support and listening. I'll come to Cynthia from Diane Blair. So maybe you can introduce yourself and then tell us a bit about the company that you work for and your relationship to the industrial REIT that is on offer.
Thanks, Eric, and good evening to everybody. My name is Cynthia Baru. So I work in the corporate finance team at Dan Blair Investment Bank. We're an investment bank licensed by CMA, and we undertake, aside from corporate finance, we've got the brokerage and the wealth management arm, and we've also got a subsidiary in Uganda as well. So in terms of what we do with ALP, we're acting as transaction advisor to ALP, and our role was really to work with a team to help structure the REIT, assess the seed assets, come up with a structure that would make it attractive for institutional investors, and then just prepare the documentation and then also work with them in terms of engaging investors. The offer is currently open, so we've just been doing our roadshows, and part of what we've been doing is really educating the market in terms of what REITs are and particularly what industrial REITs would mean for the NSC.
So maybe you can start it off also by telling us what's a REIT and what's an industrial REIT?
Sure. REIT stands for Real Estate Investment Trust, and they're basically vehicles that own income-generating real estate assets. And in terms of what we define as real estate, it can be anything from a residential, so housing, apartments, a commercial, office park, office retail, and then industrial now touches on warehousing and light manufacturing. So any asset that earns an income can fit in a REIT. And then in Kenya, we've got a framework where you can have the income REIT. So this is what ALP is looking at. An income REIT is really assets that generate income, but you're not doing any development. And then you've also got D-REITs in the market where you now undertake the development and the construction. So I-REITs are really typically suited for investors who are looking to get regular distribution and dividends on an annual basis. So ALP in particular has a focus in industrial REITs. So in terms of the investment policy and the assets they will look at, as Raghav mentioned, they are within that area. But again, in terms of REITs, you can actually define what your strategy will be. So some REITs have a broad strategy, but for ALP in particular, they are focusing on industrial REITs.
Back to Raghav now. Tell us a bit about your choice in terms of focusing on logistics. There are many other aspects of REITs, as we've heard. Why logistics specifically? And then since you've experienced a little bit Kenyans wanting to own the commonly called buroti, guta maguta, I want you to maybe tell Kenyans a little bit, what's the difference between owning that directly and owning a REIT instead?
Eric, you're going to have to help me brush up on my Swahili.
That is the small plots that Kenyans have. They tend to own real estate. Generally, as a Kenyan, like we are very interested in owning a real estate directly. But then, so what I wanted you to do is maybe give us that bit of why it's actually easier for someone to own a REIT instead of actually going to buy a piece of land whose disposability is a little bit of an issue sometimes, and why choose a REIT instead.
So shall I start with the logistics bit first?
Yes, please.
In terms of logistics and supply chain infrastructure, it is such a critical part of the value chain for an economy. If folks are unable to get goods and services from where they are meant to be to where they need to go, then that can be a significant limitation for the growth of an economy. If we look at kind of the, let's say, the fundamental drivers of Kenya's economy, I would hope that many of us believe in its long-term growth potential. But the fact is that supply chain infrastructure is largely underserved in Kenya and the wider region, by the way. It's very much done on a piecemeal basis. Typically, if we look at Nairobi, you find, let's say, family offices with legacy land holdings that have put together. They don't really have the institutional quality that I think is required for enabling the growth of companies and the growth of economies. Just to give you a little bit of a stat, when there was an independent study done by a market research company, and they measured what is the per capita industrial real estate, institutional grade industrial real estate that is available in different countries. When you look at, for instance, the US and other developed markets, typically they offer about 50 to 55 square feet per person. If we look at some of the developing economies like China and India, the range is usually about 2 square feet to 8 square feet per person. Kenya's number is 0.7 square feet per person. So there is an element of cause and effect. One is that as the economy grows, it will demand more better quality supply chain infrastructure. But I also believe that in order for the economy to grow, we will, from a bottom-up perspective, need to provide better quality infrastructure, supply chain infrastructure. And I think that's why we're big believers. ALP is the first mover. We pioneered this space, and that means that we've also got a lot of market learning as well. So I've been in Kenya for now almost 6 years, and this debate has always fascinated me with respect to land versus REITs. For me, it's relatively straightforward. I know there's an emotional connect to owning real estate. There's also a feeling of security. But the fact is that you tend to, by locking in a significant chunk of your capital, significant chunk of your savings into land holdings, typically that investment, if we call it that, is unproductive because you've just got the land there and it's not really generating any return for you. What tends to happen is this land might even get passed on down generations, but subsequent generations aren't interested in managing some land parcel that's upcountry, which they rarely visit because their work and where they live is in Nairobi. The benefit of investing in a REIT, for instance, is that it still gives you that real estate exposure. Maybe you don't have the emotional connect to it because it's akin to a stock. You can't really see it in front of you, but you can drive by the buildings and say, yeah, I own a part of it. And I think the benefit is that an investment in a REIT is typically more productive because, as Cynthia mentioned, the regulations stipulate that REITs have to pay out regular dividends based on the income stream that they achieve. The last thing I'll say, and I touched upon in this with the land holding, is that when you want to dispose of it, for instance, trying to get someone to also pay a large chunk of money in order to offload a direct real estate investment can be challenging because they might not have the same emotional connect with as you do. However, if you want to, let's say, liquidate some of your REIT investment because you've got 100 units in a REIT, but you need some cash momentarily to pay school fees, you can dispose of 50 units, get that money straight away, pay off the school fees, and still keep a portion of your holding remaining, and then look to top it up as you're able to build up your cash position.
Thank you for breaking that down. What is the underlying assets for this specific ALP Industrial REIT that you're offering in the market? And how do the units relate to the underlying real estate? So maybe that you can explain to our listeners about that, and then we can get started on the offer.
That's a great question. Thank you for that. The other nice thing is that this is not a concept. This is not a proposition. We have 4 existing assets. 2 of the buildings are in our park in Tatu City, which is a special economic zone. The park is called ALP North, and the other 2 buildings are in a master development called Tilisi, where the park is called ALP West. In total, we're going to be providing about 55,000 square meters of real estate, so people can actually see the buildings, they can touch them, hold them, and you get to validate that are they occupied as well. We're currently operating at about a 98% occupancy across our portfolio, which is fairly healthy in terms of real estate. So those are the assets that we're going to be bringing in. The proposed valuation of the REIT at the time of launch is going to be about $45 million.
And then how does that now relate in terms of income, and what will someone get once they own a unit of the REIT?
Depending on your investment or the quantum of your investment, you will get units commensurate with that investment. Each unit is valued at $1. So it is a US dollar denominated REIT, which I'm sure we're going to come on to. And what they will get is whenever the REIT pays out a dividend, which our intention is to, at a minimum, pay out a dividend twice a year, they will get a portion of the dividend commensurate with their holding in the REIT. The projected yield for the REIT is between 7 to 7.5% cash yield on a long-term basis. And that, again, is in US dollar terms.
So in basic terms, you're owning a piece of a building, and then that building, once they pay rent and all that, someone will get dividend twice a year. As you say, at least 80% of distributed income is going to be given out as dividends, right?
That's correct. So it's very, I'm sure, I know you've got very savvy listeners. They've probably heard of this concept, tokenization. In a way, a REIT allows for a fragmented interest of real estate, just as you put it.
The choice of USD versus KES, could you maybe speak to that? What informed that decision?
It's maybe, let's say, circumstantial, if that's the right word. We earn our rent in US dollars. And so therefore, the intention is when we pay out our dividend, it's also going to be in dollars.
Is it possible also to share some of the maybe clients you have in their buildings, or is that protected information?
No, I can definitely mention some of the names. It's a nice mix of a broad selection of sectors that are represented. Just as an example, we've got a company called Sun King. They do assembly and manufacturing of solar products, anything ranging from lights, lanterns to TVs and telephones. We've got the distribution facility, the first ever distribution facility in East Africa for Carrefour has been established within our premises. So this is quite a pioneering facility that is set up. Aside from that, for those that are health conscious, I'm sure there's some gym fanatics in there. We have the assembly facility for USN, which does these kind of health supplements like protein shakes and creatine and stuff like that. So those are some of the names that we've got.
I am hoping as part of the future AGMs, you're going to take the investors around to the properties and perhaps so they can see for themselves, right?
Yeah, very much. We welcome visitors to see that we're not selling them a story. It's real.
That's very good. So then in terms of occupancy, do you want to share maybe a bit about the rate of occupancy? Because I think that's a key component in terms of the logistics.
Across the portfolio, our occupancy is at 98%. In fact, for the REITs, the underwriting we've done is at a lower level. So in fact, for any investor coming in, there's already some additional return levers to even boost the return beyond what we have under it.
Let me give you a bit of a break and talk to Cynthia a little bit. Cynthia, to bring the REIT to market, there's a lot of regulators that you've had to deal with, or at least help ALP to deal with. Who are some of the key people that you've engaged in the process, and how are unit holders protected under the CMA framework? And in terms of reporting mechanisms, what should prospective investors look up to when the REIT comes to market?
Before we can come to market, we have to get the REIT authorized by CMA. And that's a process where we have to bring on board a REIT trustee. So the trustee for ALP is Cooperative Bank of Kenya, and they've got like significant experience in the space. And the trustee is quite key because they actually act on behalf of the unit holders. And the trustee is the one that mandates the REIT manager to come up with a strategy for the REIT, how they invest, and then also the distribution strategy as well. And the trustee is the one who actually, the REIT manager would like make a recommendation. I want to acquire these assets. They'll have to make sure that the assets are valued properly. So there has to be an independent valuer. And then that proposal is now brought to the REIT trustee, and the REIT trustee will look at it and make sure everything is in order before that decision is sanctioned. And there are also other decisions that have to now come to unit holders for approval, such as the final distribution and so on. So that structure, we have to prepare it, and we have to prepare the documentation and take that documentation to the CMA. So the CMA approves the REIT, and it also has to approve the REIT manager. When ALP actually got a REIT manager license, before now the REIT could be approved. And then once the REIT is authorized, we can now come to market. But underpinning that as well is because since we knew we were looking to target institutional investors like pension schemes and insurance companies as well, we also made sure that we engage with the RBA just to inform them about the transaction and just to get a sort of no objection for schemes to invest in the REIT. We also had a session with IRA where we took them through what the REIT was doing, the assets we'll be investing in, so that when it comes to insurance companies looking to invest, we're able to inform them about that regulator. As we were also looking to list the units on the NSC, we made a conscious decision to list on the restricted board of the NSC. We also engaged with the exchange and got approval that once we have finished the capital raising process, those units can actually list. And the NSC and CMA actually gave us some exemptions. So on the restricted board, even though the minimum is $100,000, we're allowed to trade in lots of $10,000. So those lots allow us to build in a bit more liquidity into the transaction. So that's on the regulatory side. But because are seen as alternative assets, particularly for the pension schemes, we've also undertaken engagement with the trustees of those schemes and then also the fund managers as well. So we're presenting to the fund managers, we're also presenting to the schemes because it's a bit of a longer process with alternative assets where the fund manager has to do the evaluation, make a recommendation, And then the trustees now approve the investment as well. So I would say it's a bit of a process. And then because we're dealing with land and property and the reputation that property has in Kenya, the lawyers have had to do a very extensive due diligence process. There's a legal opinion that looks at the title, the surety of the title, whether there's any encumbrances on the title and things like that, so that when those assets are coming in, we're not having any challenges that you sometimes see in the real estate space as well. And currently now the REIT is being registered with KRA. So when you put all those pieces together, it takes a bit of time to get the REIT up and running. But then once it's authorized, once it's in the market, there's a bit of assurance from investors that there's a lot of due diligence and care that's taken to actually get you to this space and get you to the point where you can actually invest.
In terms of key features of the ALP Industrial REIT itself, could you walk us through that, maybe in terms of number of units, a minimum subscription, how much someone needs to invest in it? And then I think Raghav can also add to that.
The offer is for 30 million units, and then we've also got a green shoe option of 9 million units. So in total, you're looking at 39 million units. We've priced the units at $1 per unit. And then the minimum subscription amount is 100,000. As we mentioned, this is a restricted offer. So under the REIT regulations, investors are categorized as professional investors and then non-professional investors. So professional investors are really your institutional investors, your pension schemes, insurance companies, and then maybe high net worth investors who have the ability to pay for professional advice. So as the REIT is being set up, we've limited it to professional investors from the get-go, just so that the market can get used to what is a REIT, what is an industrial REIT, what type of returns are you looking at. So once it stabilizes, I think in the future, we'll look to expand that. And because of that restriction, we've got 100,000 minimum, but then you're going to be able to invest more than that in increments of 10,000 units. And then that 10,000 units now links to what we mentioned earlier in terms of when it actually comes to trading on the NSE, you can trade in lots of 10,000 as opposed to lots of 100,000. So I think those are really the key features. And then of course it's an IREIT, and then it's set up as a closed-ended scheme. So what that means is once the capital raise is over, if we need to do another capital raise or actually get in a new property and then issue units, would now have to create additional units. So it's not like a typical CIS or money market where you're continuously creating and cancelling units.
Perfect. And then also in terms of listings in the end, so investors can also look forward to trading at the market. That's something that you've just said also.
Yeah, so we're quite excited about that because this will be the first USD denominated security that will trade on the exchange. So we're looking at a listing date on 11th March. And we've also been doing quite a bit of work in the background, supported by the NSC, CDSC and CMA, just to set up that USD settlement cycle. So by March, depending on who you trade with, your broker should be able to actually credit USD securities in their back office. And then on the trading side, the NSC and CDSC have done their tests so that you'll be able to actually trade and then settle the units, the securities as well. So we've gotten a lot of support from the regulators in this space. So I think that's something that we really do have to acknowledge and thank them for.
Raghav, do you have something to add? And also at the same time, you could tell us the funds raised through this offer, what will they be used for?
In terms of the offering, how can I add anything beyond what Cynthia has? She's the expert in terms of listings and capital markets. But in terms of what will they be used for, I think that's the important thing. Because we're big believers in what we're doing and the scope for growth of the platform by doing more projects, we want to reinvest that money into either developing more in our existing sites or expanding our geographical footprint. We've already earmarked, as folks will see in the offering memorandum, we've already earmarked some pipeline projects. But for us, there's so much more that we can do within Kenya and beyond that. The only way to do that is by having that churn of capital. As you would appreciate, real estate is a capital-intensive asset class. And therefore, we really need to be able to have that turnover to be able to compound returns and be able to deliver the requisite investment return targets for our investors.
And in terms of you coming to market, what's the vision you have in terms of the ALP REIT itself and its contribution that it can be to the broader growth of the industrial real estate and logistic market in Kenya?
For us, this is a significant moment of pride. If you look globally, we're not unique. There's actually a number of industrial REITs that you'll find. One of the largest is Prologis. But we're proud because this is East Africa's first industrial REIT. We believe that we have the opportunity creation to the industries and the companies within those industries by offering them good quality real estate where, as I mentioned right in the beginning, we're big believers in the economic potential of this region. I think we're also seeing a significant focus on building up, let's say, the kind of urban infrastructure. And what you find historically, and when we look at other markets, is whenever there's a focus on urban infrastructure development, or not even just urban infrastructure, but infrastructure across, let's say, pan-country, then supply chain infrastructure is very much required. So we want to be able to contribute to that. And we want to be able to fly the Kenyan flag globally and be able to be counted within that peer group of industrial REITs in the not too distant future.
Back to Cynthia, maybe the key dates you can tell people to pay attention to. I think it was open since 17th of December. The close date is next month towards the end, and it's an allotment date, a listing date, and all that. You can remind people about the key dates, and at the same time, some wananchi may be worried a bit about the minimum subscription around 100,000 USD. It's pretty steep. What would you advise someone who wants to be part of this and still is not able to have that minimum subscription guaranteed for themselves?
On the dates, the closing date is going to be the 27th of February. So again, next month. So we have about 4 weeks. We have about 4 weeks left. And then we're looking to allot on the 4th of March. And then we'll look to list on the 11th of March. It's a fully electronic offer. So we've got a site where you can apply. And you just need a CDS account and then just plug in your details and make your payment. So it's fully electronic. And then in terms of minimum, yes, we hear that 100,000 might be a bit steep for individuals. So what we have at Dyer is that we're aggregating investors who are able to invest like less than 100,000. So in lots of $10,000, we're going to be able to offer a solution for those investors. And then when it comes to listing thereafter, they'll be able to have the ownership of 10,000 units. So we're aggregating at Dyer. So if anybody's interested, please feel free to reach out. And then in terms of the actual post-listing, anybody is going to be able to purchase in lots of 10,000 units as well. So we've tried to balance the need for liquidity versus it being a restricted offer and trying to manage the price volatility that comes with a completely open offer.
And Raghav, you had something to add?
One thing I just want to clarify or emphasize is that our intention has never been to offend any wananchi. We have great respect for every individual investor. I think the point here is that as we're even encountering from this conversation, there is a lack of familiarity with this asset class in terms of the real estate asset class, but there's still a lack of familiarity with the REIT space as well. There's only a handful of REITs currently available in the market. And what we want to do is build a track record, show people that there is substance and robustness to what we are trying to do. And that is why the foundation is centered around getting, as Cynthia put it, sophisticated investors. The aim very much would be that once we have that track record and we have developed a level of comfort across the economy, that's when we would open it up to everyone. But for now, we want also to minimize some of that, let's say, price volatility that might come about when folks don't necessarily fully understand what we are trying to achieve. I just wanted to provide that assurance that we're not here to offend anyone.
There's a question that has come through from the investors. What should make investors comfortable that the investment will be managed properly and with due care? Maybe you can pitch to investors what you are going to do about their property.
It's a very relevant question. Appreciate for those that have raised it. I would say that the first port of call would be to look at the asset class and look at the asset base. Do you believe in the importance of industrial real estate, what we're trying to offer? Do you believe that there is demand for this asset type? Obviously, there is an element of proof is in the pudding. And the fact is that when you have 98% of portfolio occupancy, that to me does suggest that there is underlying demand, and we're very much big believers in that. We had a independent market research study done by CBRE, which is a global property consulting firm. And what that highlighted was that within Nairobi alone, and just for institutional grade industrial real estate, so taking away the demand that is there for go downs, but just for what we do, there's a demand potential of 3.5 million square feet, which is quite substantial. And this is for just the near future. In terms of the real estate proposition, that's what investors have to get themselves comfortable with. As Cynthia mentioned, this is a segregated investment strategy. We are focused exclusively on industrial real estate, which also makes things easier for people. Because the fact is, if you have a diversified investment strategy, then you have to take a call on multiple asset types. Here, we're just saying we're making life simpler for you. All we're going to focus on is industrial real estate. The other aspect I would bring out is with any form of indirect investment where you are investing in a fund, whether it's a private equity fund or a REIT that is managed by someone else, you have to get comfortable with the people and the people behind that proposition. We in-house have a track record. That's why we were very, let's say, keen and confident of getting the REIT manager license. That's why we applied for the REIT manager license, because we have a history of delivering REITs and managing REITs, and I would say successfully. But saying that, the team that is behind the ALP Industrial REIT is very keen to really set this REIT as the benchmark that will be the one that everyone compares themselves to and investors compare themselves to when they are evaluating different REITs. We don't take anyone's investment for granted. We don't take it lightly. We take it as an honor. And we want to ensure that we work as hard as possible to deliver the returns that we have earmarked for investors as part of this proposition.
I think that's a strong value proposition as you could find in the market. That's impressive that you dedicated to make sure that the underlying asset is managed pretty well. A question as a result of the conversation we had earlier about the rent being paid in USD. The listener was wondering, some of these companies that you've mentioned, their revenues are in Kenya shillings, but then the rent they're paying to you is in USD. Doesn't that create a challenge for them in terms of perhaps if the Kenya shilling was to change from the stable rates that we've been experiencing the past year or so? How do you mitigate that?
Kudos to the listener who's asked that question. It is a very fair question. I think part of that risk in our case is mitigated by the fact that about, let's say, 55 to 60% of our tenant base actually has their revenue model in USD as well. There's a heavy element of export that is part of the business models of the folks that are operating out of our facilities. But saying that, we also have very much local market focused companies. And so to that extent, their revenue model is in shillings. What they have found is that there are many positive externalities by operating out of our space. So despite that challenge that they have of essentially converting some of their revenue into USD to be able to pay the rent, there are other benefits that they have gained, such as, let's say, investor access. Many of our tenants are SMEs and they are looking to grow their businesses. And by being present in the secure premises that we offer with the clustering economic effect that we provide, what you find is that their businesses have grown by attracting angel investors or private equity capital into their businesses. And so there are many other considerations that do come into play beyond just the fact that the rent is in dollars. And I think that's how we've been able to attract the tenant base that we have.
So if I get that right, you're creating an ecosystem that is self-sustaining, that is self-enhancing in a way. So they're tapping into a network that you're already building. And that ecosystem is actually good for them to thrive as a business.
Exactly the right word to use, Eric. And that's why you're in the position that you're in. You put it aptly.
Thank you. I want to come back to Cynthia. I want you to maybe reiterate for the key list for the listeners, the key players in bringing this REIT to market. So there's a REIT manager, the trustee, they're key advisors in the process. What has been their roles? And maybe if you can name them, and then if you can distinguish between the REIT manager and the trustee in terms of their roles, I think that might help our listener to be able to understand who are the key people involved in this REIT as it comes to market.
So the REIT is set up as a trust. So you have, as I mentioned, the REIT trustee, and that's a very critical function. So for us, Cooperative Bank of Kenya plays the REIT trustee, and they also have to go through a licensing process with the CMA, and they also have to have a capital base of about 250 million. And why that is because they take on a liability and responsibility for the REIT. And due to that role, they're also very thorough in terms of the assets that come in, the decisions that made. They just make sure that it's not just the REIT managers deciding I'm going to buy building A at this price, just give me the money. There's a very thorough review process, and they also do their quarterly meetings, and then they've also got to the annual general meetings as well with the unit holders. So the REIT trustee is quite critical, and almost from the beginning, once you make a decision that you're going to set up a REIT, identifying a competent REIT trustee is key. The REIT manager is responsible for the strategy of the REIT. So what assets are you going to invest in? How are you going to decide what assets you're going to buy? What is that criteria? Because again, Kenya properties, it can be a bit dicey at times. That criteria is quite critical for the REIT manager. So again, you get comfort that they actually are going through a very rigorous due diligence process. They're looking at returns to make sure that once it enters the REIT, the investors are actually going to get competitive returns. Rago mentioned that ALP got licensed last year. And the way the CMA looks at REITs is that if they believe that you have the ability to manage a REIT, they're able to give you that REIT manager license, and then you come to market with that. The REIT manager is critical for your returns. What is the REIT giving you? And that's their main role. You've also got the property manager. So the property manager, that role is delegated from the REIT manager, and the property manager is really responsible for the day-to-day management of the assets. So sometimes they have a role for leasing. They make sure that the OPEX, the operations are going on so that the tenants can actually stay. So again, when you talk about tenancy, one thing is attracting high quality tenants. The second thing is making sure that the operations, the facilities are up to a certain level that the tenants are happy, but also that you reduce your operating costs as well. So one of the things that we didn't mention is that ALP is a green certified REIT. The buildings are all IFC Edge certified, and some of those gains in terms of energy efficiency flow back to the tenants as well. So you've got the property manager. Now, you also have to have a legal advisor, and the legal advisor helps set up the trustee, and they're also responsible for doing the due diligence on the properties as well. So there's a legal opinion that comes out there, and that legal opinion is for the trustee to understand what properties are coming in and so on. The other role is tax advisor. So again, since you're moving assets into a REIT, you also have to be very careful about what the tax implications are going to be. So when you're acquiring a property as a REIT, are you paying stamp duty? Are you paying VAT? All these aspects as well. The structure you put, is it efficient? Again, we're talking about returns. So it's very important that the REIT manager has sight of that. Then you've got the transaction advisor. So that's the role we're playing. So that's a requirement in the REIT regulation. So for us, we coordinate all the different advisors, and then we also help with the structuring and then the investor engagement as well. So those are the key roles. And then we've also got the unit registrar, who is image registrars. And then you've also got the reporting accountant. Part of the documentation is really to prepare the historical accounts. So what the accountant does is assume that if the REIT was in place 3 years ago, what do the accounts look like? And then you've also got the projections in the next for the next 3 years as well. So you get a lot of information in the OM, and then that's prepared with the REIT manager together with the reporting accountant. So those are all the players. And when you list them, there are quite a few. So again, and when you talk about timing of coming to market, some of these things do take a bit of time. And I think that's the reality of currently of where we are. But it just talks to the care that's taken to actually put together the REIT. So by the time, again, we come to market, you can take confidence in the fact that the money we're asking for is actually going to go to its intended use.
A couple of questions that are coming, and it's open in terms of the response. Something for you, Raga. Someone is asking you, saying that you have coverage of Sub-Saharan Africa. So is the REIT going to be investing in real estate outside Kenya at some point? And also, perhaps for either of you, how long did you take to get the REIT approved?
It's been the name. We were Africa Logistics Properties. So I feel like if we remain within this geography, then we'll have to change the brand to KLP and not ALP. But the intention would be at some point that we do look to expand the platform outside of Kenya. Whether the REIT is involved in that or that's just at the holding company level, that's something we'll see. There's obviously going to be regulatory considerations, and also it has to make sense for the commercials of the REIT and the investors of the REIT. I think there's some way to go for that. We definitely see sufficient opportunities within Kenya itself to be able to scale up the REIT. And ultimately, I think what we all appreciate is that Kenya does serve as the regional hub for East Africa. And I think some of the moves that we're also seeing recently point to that. So I think even within Kenya itself, there's the opportunity to expand the geographic footprint as well. Cynthia, would you like to take the next question?
The approval process.
Okay, sure. The CMA process took about 2 months, and that's partly driven by the documentation that we submit. So we submit, there's an offering memorandum. We've also got the trust deed because that governs the setup of the actual trust. And that includes a lot of customization based on what the strategy of ALP was. And then it also includes a lot of governance provisions as well. You've also got your REIT manager agreement, your property manager agreement as well. CMA reviews all of that, and we got it in about 2 months. And then it's also due to the CMA approval cycle because it's equity, it has to go to the board. So you also end up waiting for the board to sit. But we did it in 2 months. And then we also had a lot of prior engagement with CMA as well, just to take them through what we were looking at from a strategic perspective so that by the time the offer comes to them, they have a pretty good idea of what we're looking at. But we can say that in terms of approvals, the CMA and NSC have been quite supportive of this sector and of ALP.
If I can just add, Cynthia's got it spot on. If I'm a big believer in the spirit of partnership and collaboration, obviously the regulator has a role to scrutinize and ensure sanctity and robustness. And I would say that I give full credit to, as Cynthia mentioned, CMA and the NSC for the thorough due diligence process. But ultimately, there was a significant amount of collaboration. I don't think that 2 months is a par for the course or the average, but I think that's also a reflection of the work that went behind the scenes from Dyer & Blair and Bowman's as the legal and tax advisors to ensure that we put together a very robust framework so that it made things easier when we put it forward to the regulators.
It's always good when you're investing to consider the risk aspect of it. What are some of the risks associated with a REIT, and then how do you mitigate them? So I think this should be for Raghav, and if Cynthia has something to add, she can come on board.
In terms of the risks, we're going to be listed, I should say, not taking it for granted. We are going to be listed on the Nairobi Securities Exchange. And the fact is that you can have market movements which sometimes are not necessarily reflective of your underlying asset value. This is not just anything unique to the NSC. This is the world over, the risk that one runs with investing in the stock exchange. Our book value might assert a certain value, but the market is indicating something else. Of course, we will do our best to mitigate some of that disconnect by providing the appropriate levels of transparency, by doing the right type of reporting to give investors the necessary comfort. But I would say that's one key risk. The other one, when we look at, is the underlying fundamentals, the underlying assets. I've spoken very bullishly about our belief as ALP and the team in the provision of good quality industrial real estate. But the macroeconomic direction could be very different, which could mean that ultimately there are insufficient companies that are wanting to take up the spaces that we offer. That is a risk that we have to be alive to. Again, we will try to mitigate it by ensuring that we always have a pipeline of leasing leads to ensure that even if someone decides to exit their premises, that we've always got someone else in place to take up their unit. And then ultimately, I think there's some of the other risks with respect to maybe regulatory changes on the REIT side. Again, we work very closely with the regulators. We work very closely with other government entities as well to ensure that there are no sudden rule changes. And I think widely as a stakeholder base, there is an acceptance that REITs are going to be a very critical avenue for the maturing of the real estate space and ensuring that we can get a lot more sophistication within the asset class and get more professionalism within the asset class. So I think generally I feel that there's always a regulatory risk with, let's say, a government change. People might change their mind and they might want to do things differently. But I think the fundamentals are so strong and the need for the professionalization of the real estate sector is so strong that that is somewhat mitigated.
I'm not sure if you shared this. Did you share the maybe lease duration and renewal outlook for current tenants?
Yeah, I haven't. And thank you for bringing that up. Typically, our lease minimum period is about 5 years. In fact, as for those familiar with kind of commercial and industrial real estate, one of the key metrics that we look at as investment professionals is what is known as the weighted average unexpired lease term. So essentially, how much, if an investor is coming in, what is the rental period that they have to look forward to across the portfolio on a weighted average basis? We have a very healthy WALT, a weighted average unexpired lease term of 66 months. That's over 5 years. That means that we have some leases that are actually over 5 years. If you look at a REIT like Prologis, which I referred to, which is arguably a global benchmark, they actually have a WALT of 3 years. So we have, for any investor coming in, a lot more runway in terms of the rent period that we can offer on a weighted average basis.
And then in terms of leverage, debt mix in the REIT itself currently and future in terms of projections there?
The REIT regulations allow for leverage up to 35% of asset value. To be honest, currently, it is not our intention to introduce or have any form of leverage or debt in the REIT because the economics just don't work. But we are exploring options, and if something comes up that would help boost returns, because ultimately as investment professionals, we all know that leverage is meant to help boost returns. And if something comes up, that's something we would look at, but there is a cap of 35% within the fund.
And then in terms of unit holder communication and decision making, once it's listed, how does that look like? The setup in terms of ownership, the investors that you're raising money from now in the market, how much percentage would that own? And would they be key in terms of decision making?
So one thing to also put out there to give investors the comfort that ALP as the promoter will also take a long-term stake in the REIT. So we want to show folks that we have skin in the game, that we're not looking to run away with anyone's money. I think the other thing to bear in mind is that in terms of the regulations for REIT unit holders, the investment in units gives a participatory interest, but it is the role of the trustee, which in our case is Cooperative Bank, a very established branded organization. It is their role to serve in the fiduciary interests of investors. And so any strategic decision that we want to make, any acquisition or divestment that we want to make as REIT manager comes forward as a recommendation, but it needs to first pass the largely independent board for the REIT manager. And then once it passes that level, then it goes to the trustee for final approval. There are going to be certain decisions, particularly with respect to dividend payout, that we will get ratified by investors. So there will be regular engagement with investors. We intend to do regular investor, let's say, briefings in terms of sharing with them the results, the status of the assets as well. So it is not our intention to go silent on investors. We want to be very transparent with the information that we will be sharing.
And on that note, I expect to be hosting at least quarterly or at least half yearly to dissect some of the earnings that you will be posting. Or looking forward to that.
Your number will be on speed dial, Eric.
Thank you. Simply, I've actually I give Gav a little break and then I come back to him. A question that I wanted to ask is, does your role end once the listing is done, or will you also be engaged after that?
Once the capital raise is over, we normally continue the relationship with ALP. So we're there to support, because in terms of investor engagement, sometimes investors come through us if they have any questions about what's going on in terms of how the investment is performing or whether they want access to management. So we're able to provide that. And we're always available to actually support in any future capital raises and so on. So you find typically that the relationship just doesn't end once the capital raising ends. And because there continues to be a regulatory element, there might be some consultation required further down the line. But the thing with REITs is that, as Raghav mentioned, they need to grow and they need to scale. And that scaling comes from acquiring property or disposing of property. And that's either funded through future capital raises or property swaps. With REITs, you'll find that you'll have like supplementary IMs going forward. So that's something that we hope to support. But in terms of clients, we're always there, even though the transaction has ended.
So in terms of the future outlook, do you have a plan to raise more capital in the near future, asset acquisition and such? Raghav can respond that, or Cynthia?
Maybe I can let Raghav respond to that.
And then on top of that, I think Raghav, someone is worried about the claim around inflated prices for commercial and residential real estate properties in the country. To read what he's saying is that there have been claims of inflated prices for both commercial and residential real estate properties in the country with the fears of a correction happening at some point in the future? How is the REIT likely to be affected with changes in the real estate market?
It's a very poignant question, I must say. Let me take a few elements there, Eric. First of all, let me address that Cynthia is a confidant and a good friend, and we value her as ALP, so she will very much be connected with the REIT for as long as she's interested. In terms of further asset transfers, it's something that I referred to already. We believe in this REIT so much that we've actually already started developing the pipeline for it. We have invested capital without even the REIT being introduced in developing new projects. The REIT will enable us then to grow the platform further and be able to do more products on a regular basis, introduction of new assets, I would hope, on an annual basis, because I think that's what would give investors the comfort that it's not just a one-time thing. It's not just for the 4 initial assets. What investors want to see is that there's legs to this, that we're going to be continuing to do many more REITs. And I think that's one area that I think will help REITs validate their proposition. If investors in the wider market can see them being able to scale up. So that's one comfort I can give to investors, that we will continue to invest. I think in terms of, maybe it's not appropriate for me to comment on other asset classes, which I do not participate in. But look, I'm a big believer in the efficiency of markets. I believe that whether it's residential, commercial, or even, I'll say for ourselves, industrial, if you have inflated values, then the way of being able to tell that there's an asset bubble or inflated valuations is typically through vacancies or an excess supply. Because if the price is not reflected as fair, then you would see people not wanting to buy what is the product on offer. So if there's an asset inflation taking place within residential or commercial, do I see that necessarily impacting us or the REIT? Not really. I think that is why we have a segregated investment strategy. We focus exclusively on industrial real estate. We believe that the price that we are offering is very much fair, and that is reflected by the fact that we have the portfolio occupancy that we do. The equilibrium usually comes at a point where demand meets supply, and ultimately we only have 2% of vacancy currently, and even that we intend to fulfill very quickly. Maybe I've not entirely satisfied the question, but I think in terms of residential and commercial, that's probably a debate for another forum, and maybe not this one right now.
Definitely. If you listen to the conversation, we've not dealt with that area. This is more industrial logistics. So perhaps the listeners need to also dig in to that specific segment of the market. So there can be pockets of bubbles in markets, and some pockets are also more insulated than others because of the kind of clients that you're serving also at the end of the day. And as you said, it's an underserved market. So I think there is room for growth. That would be my comment on that. And there's a question here from the listener, and then I read for you 2 really nice quotes from the listeners also, and then I'll give you a chance to pitch to investors. So a quick one, do you have a stabilization fund? And if yes, how much?
Do we have a stabilization fund?
Yes, I'm not
Sorry,
sure what the listener means, but yes, a stabilization fund.
No, apologies if I've not understood the question, but let me try and answer. If the investors are seeking comfort as to when assets will be part of the REIT, because we want to minimize risk, whether it's occupancy risk or development risk for investors, the REIT will only acquire assets that are largely occupied and largely stabilized. That is as part of the investment policy, which means that there's limited volatility or fluctuation that REIT investors will endure. Because what we want to offer is a predictable form of return for investors. Having studied REITs globally, I heard someone once say that REITs are a lazy man's investment. And I always add, it's a lazy man's investment because you don't find a lazy woman. The fact is that you just want to be able to invest and receive dividends predictably without necessarily needing to work for it. That's what a REIT investor is meant to do. So the intention is for, and maybe that's where they're coming from when they ask about a stabilization fund, is that whilst the asset or project is being developed, the project will be on ALP's balance sheet once it gets constructed and then gets leased out, that's when we will have it eligible for acquisition by the REIT. Hopefully that helps.
Towards the end, so I wanted to read two quick thoughts from some listeners. They're saying this is a very informative session. That's the NSC CEO himself. I was very pleased to learn a bit more. And then also, this is from one of the other listeners who says that they're totally thrilled on learning about the entire potential of industrial REITs in relation to supply chain infrastructure. So I should say that both of you have done a good job in terms of explaining to the listeners. Cynthia, maybe you can remind the listeners about some key things they should remember as we close the conversation, and then you can let them know where to find you. And then I'll switch to Raghav to do the same, and maybe to give some 3 or 4 compelling things that people should keep in mind as they seek to invest here. So first Cynthia and then Raghav.
If anyone's looking to invest in the REIT, they should look at it as a long-term investment where they'll get a regular income or regular dividends. So it's the estimated cash yield is about 7.5. So they should look at that sort of like bond return. So you invest, and then every 6 months you'll get your dividend. And that type of framework will allow you to see where you place this investment in terms of your portfolio. It's not really for where you get immediate liquidity. So I would suggest perhaps that's in fixed deposits or cash, but this is just really somewhere you can park money for the long term and enjoy the dividends. The corporate governance framework for REITs and also the REIT manager, a lot of work has gone into sort of manage any potential conflicts. So I think investors should have surety in that. And the experience of the REIT manager in managing real estate, in managing industrial also now will come into play. Because the key thing about the REITs is how do you keep your return and how do you maintain that return? So in terms of how you look at that, it's really the underlying assets, the quality of the assets, where are those assets coming from, and then their expertise in terms of the decision makers. So I would say those are the key things. The key dates, we close on the 27th of February. So there's about a month. And then we also have the option that if you want to invest, but 100,000 is quite high, we are bundling lots of 10,000 at Daimler. So we're happy to have a conversation with you. And if you indulge me for just 1 minute, I had forgotten to mention that when you look at the stakeholders in the REIT industry, the REITs Association of Kenya has been quite impactful in terms of helping us deal with some of the regulatory hurdles and challenges that we've found in this space. So with respect to tax, with respect to process, they've been able to actually do a lot for us, and they're constantly lobbying on behalf of REITs and unit holders. So we just wanted to flag that. And if you ever want to learn about REITs, their contact point as well. So maybe I can pause there, Eric. Thank you so much.
You didn't tell the listeners where they can find you, by the way.
Yes. You can find us at our offices are 7th floor Goodman Tower. So we're on Wayaki Way. You can also reach out to us through email, corporates@dambler.com. And then you can also find information in terms of the application and the information memorandum at ALP's website. And then also the application portal, which is alpreet.e/offer.app. We'll be able to share those details after this, but thank you so much, Eric.
Yes, we'll share those details in a tweet that's coming up, all those details, especially on where to do the application. So Raghav, over to you, your pitch.
Thanks, Eric. It's always tough to follow Cynthia, but I think I'll bring out a couple of things for the listeners. One is that you're not going to be in this all alone. We actually have already secured an anchor investor. This is a development finance institution which has exhibited or illustrated a strong confidence in what we are trying to achieve. They have committed to invest up to $15 million in the REIT. And I know that particularly when we're exploring something that's a bit different, a bit unique, a bit innovative, you feel nervous. And for us, that's why it was very important as part of this process to get someone in that could provide that comfort level to the wider investor base, that they're not in it on their own. And that really, if someone's investing up to $15 million, I'm sure everyone would assume reasonably that they would have done their level of research, their level of due diligence. And they would have done the level of due diligence that maybe some of the listeners don't have the capacity to be able to because of maybe time constraints. They've got other jobs and so forth. That's a development finance institution by the name of Infraco Africa. They have been great supporters of us through this process, and we're very grateful for that support that they've shown in us. But now I would say that whenever we get an investor, we treat them with gratitude. And I think that's very important because it goes back to what I mentioned. We take anyone's investment lightly, whether it's an individual that is putting their hard-earned money Or, as Cynthia highlighted, we're targeting many pension schemes. Pension schemes are all about retirement age and the funds that are available to someone when they've stopped working. And that is, again, something that is a responsibility that we cannot take lightly. And we don't take lightly. And that's why I hope that folks get that comfort that we will do things right. The last thing is, I'm not a big hard seller. I don't believe in that. I think it's important for investors to make their own judgment. But I do think that with any form of indirect investing, the key differentiator is whether you can trust the person. And just as Cynthia mentioned, it's important to look at the team. It's important to look at the track record. It's important to look at what they have achieved and what they are seeking to achieve. And if that is an area that you are able to get comfort, then I believe that the ALP Industrial REIT could be a right investment proposition for you. But if you feel that we're not someone that you can trust, then definitely I wouldn't want anyone to invest. But hopefully our track record should indicate otherwise.
Thank you, Raghav. Thank you, Cynthia, for the conversation. I really much appreciate that you're able to join us to be able to break down the industrial REITs and everything that is on offer. For our listeners, make sure to follow our handle at Mwango Capital to be able to get more of these conversations. So thank you, Raghav, and thank you, Cynthia, for your time. I very much appreciate that you took time to be talking to us.
Thank you, everyone. I much appreciate you taking the time out. Thank you.
Thanks, everyone, as well, for giving us the time. Thanks.